$2.2 billion in liquidations in just 24 hours. If you check your crypto portfolio this morning, you already know. On February 2nd, 2025, President Trump dropped a bombshell. New tariffs imposing a 25% duty on imports from Canada and Mexico and a 10% levy on Chinese goods. US trade with these countries totals around $1.6 trillion annually, and tariffs are expected to increase inflation, potentially leading to higher interest rates for longer, putting pressure on risk assets. Crypto was hit particularly hard as shorts piled into one of the few markets operating on a Sunday. Bitcoin plunged below $92,000 and Ethereum tumbled past the $2,500 mark after a staggering 20% drop. There are rumours that a large market maker, possibly Scimitar Capital, got carried out on the move. The liquidation cascade was the largest ever seen in history, even surpassing the FTX blow-up. I'm sure anyone watching wants to know if this is a buying opportunity or the start of a more significant bear market that would make hibernation look appealing. While I can't predict the market's future and anyone that thinks they can should be avoided, there are some important factors that should be considered. Bitcoin since inception has followed this 4-year cycle almost religiously. We're in the latter stages of that cycle, a bull market. And while there's every chance it could rebound from here and make a new all-time high this week, there's also the chance that at some point this year we will see a shift in sentiment. The current narrative is that we expect a continuation of the cycle, this is just a pullback, and we're all going to get rich from selling into a blow-off top at some point this year. If that doesn't happen, or even if it does, at some point the narrative will switch from greed to fear of an impending bear market. The optimism won't last, and we might be seeing the first signs of panic selling. When the pendulum swings, it spends little time in the middle. My biggest concern for 2025 is that there will be a rush to the exits if the markets start to look like a bull market run is over. From the people I've talked to recently in the industry, there are a lot more planning on selling in the next 12 months to realize profits than there are looking to allocate dollars or stablecoins into crypto markets. That could have a self-fulfilling element to it, and it's something to watch out throughout the year. Meanwhile, on the positive side, Saylor's MicroStrategy keeps raising funds from traditional finance to pump into Bitcoin, which seems like either an infinite money glitch or a Ponzi scheme, depending on how much crypto you've got in your portfolio. The US president and his family are launching meme coins like Gary Gensler just got sacked, and we were expecting a better regulatory environment for the industry. This move flushed out a lot of leverage, and it will be interesting to see what happens to open interest on futures exchanges over the coming days. Trump has arranged meetings about these tariffs on Monday, and if they could be avoided, then we could see a significant bounce as markets rebound on positive news. Whatever happens, don't forget the big picture. If you're a developer working in blockchain, think back to that time when you first realized that permissionless applications running on decentralized networks are going to change the world. Trump's tariffs and Mr. Market throwing a mood swing is not going to change that. It's 9:30 a.m. on a Monday, and I feel like I've had a very long week already. If you want to stay up to date on crypto markets, then hit the like button to train the algorithm. Subscribe for updates. And remember that friends don't let friends get liquidated. Thank you for watching.